everyone, and welcome to Fun with Fitzy. Today's video is going to be on posting to the ledger. This is chapter 7 and it's actually 7.1. To date, we have used T accounts. The most commonly used ledger account is the balance column account. It has 3 money columns, one for debits, one for credits, and a third that shows the account balance or the total. As you remember in your T account, the total was at the bottom at the end once you totaled it. In the balance column account, the total is kept as a running total. Okay, let's take a look at the two different types of accounts now. So here's a T account. The T account has your debits on the left, the credits on the right, and this is the total circled. So as you see, as we did these transactions 1, 2, 3, 4, 5, 6, and 7, you did not know what your balance was in bank until you totaled. However, in this balance column account, you can see the exact same entries. So transaction number 1 was a debit to bank. You can tell that this is bank because the account name is at the top. And from our chart of accounts, we have the account numbers here. But the first transaction was a debit of $5,000. You can see it there. And there would have been a debit balance of $5,000 after that transaction. Next, we debited bank for $700 on the 17th. There it is there. And now our running total is $5,700 as a debit balance. This column here represents what the balance is, whether it's a debit or a credit. Next, we credited the account for $350. So here it is, which means we had $5,700. Subtract the $350 would have given us $5,350 right here. But it's still a debit balance, and so on. Each entry is recorded by date. It's identical to the date conventions we use in the general journal. The year goes at the top, and the month is only repeated once, and thus it changes, and each date is repeated on a separate line. Particulars column is used for the additional explanations. It's not often used, but we do use it a few times. We use it when it's an opening entry, which is the very first transaction in a company. So let's assume that this $5,000 was the owner invested $5,000. We would put opening entry here. Otherwise, if it's any other transaction, you leave it blank. And I'm going to talk about when we forward the balance here, we use the word forward. And when we get into chapters 9, we're going to be closing the accounts and stuff like that, so we'll be putting some words in here as well. But for now, we'll be only using opening entry and forwarding. The debit and credit columns form the core of the account. So here's your T. This, if you look at it, is very similar to this up here. That's why this is called a T account. The balance is calculated and shown after each entry. We went through and I gave you some examples already. And this debit and credit column indicates the type of balance. And sometimes you may go into a credit balance in this asset account, and then that would be that was an exceptional balance. The account name goes at the top, and the number from the chart of accounts, we talked about that. There are 6 steps. 5 of them are performed in the ledger. 1 is performed in the journal. And we start off in the ledger. You find the proper account in your ledger. In computer software, which you'll be seeing in the lab, we'll just find the proper account by looking up the proper account number. Next, record the date. Use the next unused line in the account. Number 3, record the page number of the journal in the posting reference column of the account. Number 4, record the amount in the appropriate debit or credit column. Number 5, calculate and enter the new account balance in the balance column and indicate whether this balance is a debit or a credit. And then finally, we're going to cross-reference. This is where in the journal we record the account number to which the posting was made in the ledger account and enter this in the posting reference column on the same line as the amount being posted in the journal. Okay, so let's go through each of those steps. I know I went through that really fast, but here, let's go through it. So remember, here is a partial journal paper. It's been cut off right here, so this is just a sample. And there's a transaction here where we bought some office furniture, we paid some cash, and the rest is on account. So we need to transfer this to the ledger. So first of all, we're going to find the proper account, step 1. So we find this ledger account. We're going to record the date. So the date of this transaction was August 14th. So we're going to find the next new line and put August 14th there. Next, we're going to record the page number. So this was on page 14 of the journal. So we're going to write J14 here to represent the journal. Then we're going to take, it was a debit of 425 here. So we're going to put a debit of 425 in the debit column there. Next, 5, record the new balance and indicate if it's a debit or credit. So here, we already had a debit of $877.06, and I know it's a debit because the debit says so right here. So I'm going to add, because it was a debit, and we just debited it again, so I'm going to add that 425. So 877.06 plus 425 equals 1302.06, and it's still a debit balance. If this was a debit balance and we credited it, we would subtract. So you do the opposite. And then finally, this was account number 110 right here. It says 110 underneath my thing. You got to put that number back in the journal. And now I can tell by looking at my journal that we've posted this particular line here. But right beneath it, the bank line here has not been posted. So let's take a look at the next one. So we've posted this one, it's done. Now we need to do bank. Step 1, find the correct bank account, which we did. Step 2, record the date, August 14th. Record the journal page number, which was there, journal 14, because we got this from page 14 of the journal. Step 4, write the amount. So it was a $150 credit, so we're going to put it in the credit column. Step 5, record the new balance. So we had a debit of 1,206.15 here, and I can tell it was a debit, a balance. And I'm going to subtract 150 because this was a debit and we credited it, we subtract. So 1,206.15 subtract 150 equals 1,056.15. And the last step is to record the ledger page number in the journal, and that's called cross-referencing. So now we can tell that this has been posted and this has been posted because there is a posting reference number. The ledger account number is in the journal. Last line for this particular journal entry, we have accounts payable. So we got to find the accounts payable account, which we have done. Step 2, record the date. Next, we're going to write the journal page number and the amount. So 275 credit. So we're going to put a $275 in the credit column. And then we're going to get the balance. We had $0 here. You notice when there's 0, you can put lines on either side of this, and you can just leave this line blank here or put a line through it. This is what I typically do. So there was nothing in this account, and we just credited it $275. So now we have a credit balance of $275. And then finally, cross-referencing. This was, you can see here, ledger account number 212. We're going to put that in the posting reference column of the journal. So you notice the journal has a posting reference column and the ledger has a posting reference column. Okay, so this is what it would look like. These are the 3 accounts that we posted. As you'll see, they're all completed. It was from journal page 14 and it was all on August 14th here. And this is our new balance in each of those accounts. And we talked about cross-referencing, but formally now, this posting reference column confirms that the entry has been posted, like we talked about. And if there's nothing in that journal, indicates that the entry has not yet been posted. So cross-referencing makes it easy to trace back to the general journal. So if we're looking at this ledger, we know on journal page 14, we can look at August 14th and find this transaction. Entries in the journal can be followed through to the ledger because in the journal it has the ledger page number. And if the posting process is interrupted, it's easy to see what still needs to be posted. Okay, we've talked about making corrections in this course so far, but let's just reconfirm. As a rule, we do not erase ever in accounting. Okay, that looks like it could be fraudulent activity. Instead, when we find the error, immediately we neatly stroke through it, one single ruled line, and write the correction above. You know this already. Errors found later can be corrected by means of an accounting entry. Forwarding, I mentioned forwarding briefly. Forwarding is the process of continuing an account. So when you run out of room on the ledger account page, you need to forward on a new page by carrying forward the date and the balance from the previous page. By now, after this video, you should be able to post from the journal to the ledger and be able to cross-reference and forward. Hope this helped, and thanks so much for watching.